Hello traders, Gary Wagner here and welcome to this edition of Chart This After the Show. This is being recorded on Sunday evening just after 9:30. That would be, of course, Hawaiian Standard Time, which means that the markets have just opened Monday morning in London. They've already gone through, of course, Australia, then into Hong Kong. We can see that the markets are under pressure, currently trading off about $11 when we compare to Friday's close, 13.24. I believe the low is about 13.22, so we're just off the lows. And the interesting thing is, on a daily chart, this candle on Friday as it began to form was green because we had a higher current than the open of that candle. But now you can see it's about $11 lower, and we've got really a series of sell-offs in terms of the marketplace itself, each day giving ourselves a lower low and a lower high. Up until this point, we do have almost an equal high and we have a higher low, but it's trading within the range of Friday's trading session. Now, what I'm looking for is still going to be the same. To me, it's quite obvious we had our exceptional $200 plus rally, and so whether the market stalls in this area, we're saying 13.13 to 13.14. In terms of our current play right now, we do have stops just below 13.20, but as you know, it's a very, very aggressive signal that we took on after taking $62 out of the market, then another $25 on the last trade. So I was willing to risk $12 on this trade, but I certainly think that we'll be stopped out of it. My sense, though, is that we will probably see some sort of a bottom here, because if we do not, the really next logical place to look at is going to be just at around 1300. You've got 1298. That's your 61% retracement, 1289, 50% retracement. And that is based upon our two different fib retracements, one spanning this entire cycle and the secondary one going to the same high, of course, but starting much higher, starting at around 1237. Now, more importantly, the beauty of what we see right now is as follows, and that is for any kind of a Elliott wave count to hold any kind of weight, we really need to see our primary wave one conclude, and then we use that as our benchmark to kind of calculate our forthcoming waves 2, 3, 4, and 5. Now, you will typically get anywhere between a 38 and a 61% retracement. This would be your wave 2. So even if we assume that the market goes down to 1300, the interesting thing is that on wave 3, we know that wave 3, simply put, cannot be the shortest of any of the impulse waves, which would necessitate, in terms of a range about equal to what we saw in wave 1. So assuming that the market even goes to 1300, if you add 200 to the 1300, of course, you would then really conclude or terminate this wave 3 at around $1,500 per ounce. For those of you who are our daily subscribers, this, of course, will be followed by our daily report. That will be live by noon tomorrow. And of course, if anything breaks, we'll send you out a special trade alert. And for those that are watching this through the Chart This series after the show, I absolutely invite you to go ahead, sign up for our trial, 7 days. You have nothing to lose, and see if it's something that won't help make you a more valuable investor and trader and really help the bottom line. This has been Gary Wagner, wishing you as always good trading. We'll talk to you soon. Bye-bye.